Welcome back to Trading Hour. Well, the Indian rupee has rallied to a two-month high as the dollar has remained soft, and India's likely current account surplus this quarter has led to covering of short rupee positions. Latha is here with more details.
Well, I can rattle out statistics on rupee's strength. I mean, would you believe it a month ago that we would be talking like this? It is at a two-month high, plus it is the sixth straight day of gain. If you only looked at today's gain, at its height, it was a 0.25% higher. If you looked at last 7 days, it is 1% higher. And if you looked at from February 10th lows, when it went to 87.95, the rupee has gained 2%. Today, the high was 86.20 to buy a dollar. Now, this sentiment change is both because of a sentiment change in the dollar and the rupee. Dollar has been softening from the mid-January levels of $110 index. That's partly because euro has strengthened, especially after the last week of February and the German deficit. You've seen euro strengthen and the dollar index go to 103.5. Plus the Fed saying that they will persist with the two rate cuts has kept sentiment on the dollar softer. On the other hand, sentiment on the rupee has diametrically changed, especially after the February trade deficit indicated. I mean, the deficit was like a 4-year low. Plus, if you counted surplus, it was the current account surplus, or rather a trade surplus, giving the a clear indication that in Jan, Feb, March, we will report a current account surplus, which means more rupees, more dollars coming in than going out. Plus, you can see the FPI dollar outflow also thinning out. It's not yet zero every day. Now, that is leading to all the rupee shorts covering. There are all these corporate treasuries which take positions. They are in a hurry covering their rupee short positions or their dollar long positions. Plus, exporters are selling off their dollars in a hurry. They were probably expecting 87.5, etc. And now by March end, they will perhaps not get that kind of money. That flood of dollars is coming. Reserve Bank in a very comfortable position. Even last week's data indicated they had bought dollars, to prevent appreciation. And even today, the expectation is that they are buying dollars as well as taking old, allowing the old swaps to mature, which means they are selling dollars. They're buying more than they're selling. That keeps RBI in a comfortable position. All told, it looks like the rupee rally is here to stay. And if it is tapering off, then it's more because it is the Reserve Bank which is buying dollars.
Thank you very much, Latha, for explaining that. But it's